Afternoon, Chairman. We are now live.
Thank you, Thomas. Welcome to the Pension Board meeting. Have we got any apologies?
None received.
Any declarations of interest? The usual ones?
Yeah, sorry. My wife receives a pension from the local government, from the Lincolnshire scheme.
In that case, let's go on to item 3, which is the ratification of the notes of the informal meeting held on the 13th of July. You'd be aware that Kim and David were unable to attend, so we continued with the meeting. But what I'd just like to do is just walk through the minutes, so at least you were asked to note them and you ought to be a party to them. So as you'll see, we were in quorate and continued as an informal meeting. On page 2, we noted the board appointment, Peter. I was hoping he was coming in then. And then the pension fund update, minute 35, we noted that report. Pensions admin report, again we noted that report. That was minute 36. 37 was data quality. We noted that report. And then on 38, we had a long session on the report and accounts. We got an update on 21-22. The conclusion was the report been noted. Just, Thomas, forgive me, but I don't think conclusion 2 reads very well. It says the board be satisfied with the draft pension fund accounts subject to ratification by the board. I wondered whether we should say something like the pension committee's approval of the draft pension fund annual report and accounts be endorsed subject to ratification. I'll give you the wording afterwards if that's okay. It looks a bit, doesn't feel right at the moment. If that's
yeah,
okay.
We can add that for sure.
Okay. Yeah. And then the work programme, 39 training needs. The board training policy be approved again subject to ratification by the board. And then the work programme, that the report on the work programme be noted.
It's also worth mentioning that we approve the minutes as well at the beginning.
Yeah, okay, yeah. We approved the minutes of the previous meeting held on the 16th of March. That was a long time ago. So are you happy to, what's the wording? So we want to ratify the notes of the informal meeting held on the 13th of July. Everyone happy with that? Good, yep. Thank you. So let's move on to item 4, the pension fund update report. Is that you, Joe, or yeah?
That is, thank you, Chairman. So this is the standard quarterly paper. I'm just going to highlight the key points here. So paragraph 1.2 on page 9 reminds members who haven't completed the Pension Regulators Toolkit that this is required within 6 months of joining the committee, and I'm pleased to say that all board members have completed this training. New committee members have been reminded to complete it within the required 6-month period. Paragraphs 4.8 to 4.12 on page 12 provide some background information on a change to how Border to Coast is funded, and that will be going through the governance process in the next few months. So the key points to bring out in this change is that the change in funding method was always expected to happen, is just being brought forward a year at the request of the partner funds. That Border to Coast have worked with funds to propose the new approach. This isn't something that's being forced upon us. Basically, what it means is that the cost of the funds will be based on the actual assets under management rather than the fund strategic benchmark allocations, which has been done since the creation of the company. And this isn't an increase in costs of Border to Coast. It's actually just a fairer way to allocate them and is actually the industry standard. So this will involve changes to the fund documentation and the shareholder agreement. And once everything's finalised, the amended shareholder agreement will be brought to the Pensions Committee for approval and to the board for information. Section 5 on page 14 gives an update on the annual report and accounts, and I'll just pass across to Claire to give us the hot off the press latest update.
So as an update, we haven't received an opinion yet for 21-22, but we're expecting that any day. It really is in the final stages of just needing letters of representation signed by the Director of Finance, and then for Mazars to sign on the line for the opinion. For 22-23, the external auditor issued their audit completion report, so the statutory ISA 260 report, at the end of last week, and that will be at the audit committee on Monday, and we expect an unqualified opinion for that year end as well. We will bring that audit completion report and any further comments from the external auditor to the board meeting in January, and we expect an opinion by the end of the year for 22-23.
Can I just add, if I may, I attended a training webinar yesterday, and it was highlighted that this, what you've just mentioned, Claire, it's an issue across, I think, all the funds, isn't it, about the delays and I know, Roger, as the chairman, you're very sort of aware of this, but all I was quite reassured, and that's all I was really going to comment, that it's not unique at all to Lincolnshire Fund. It's England, apparently. It's the English funds that are struggling with this. I think Scott...
I'd call it shambles.
Well, yes, all right, yes.
Nearly 1,000 sets of accounts are not yet signed off. But forgive me, Claire, when I spoke to... I had a session with Andrew on Monday, Andrew Crookham, and I thought he was hopeful that both sets of accounts would be signed off next week after the audit committee, because he was very proud of that fact, and you know, he said that there'll be, instead of 5, there'll be 6, if you like, authorities that have signed everything off.
And hopefully that will be the case, that it will be very shortly. For the pension fund accounts, we're still talking with the Mazars technical team about some minor wording changes in the accounts, so that needs to get finished from our side. As I understand it as well, the partner for the pension fund, they need to provide the accounting report assurance letters, so those authorities which take pensions accounting reports for consolidation into their accounts, they require that our auditor does some work on their behalf. Those letters haven't been issued yet, but should be in the coming weeks as well. So I say the end of the year, because these things have a tendency to drift. But yeah, if it can be next week, then we've done everything that we possibly can to do that. It's really for Mazars to do the things that they need to do. I think we struggle a little bit because we've got 2 partners signing off on Lincolnshire, so one for the county council and one for the pension fund. So their aspirations need to be aligned, and they maybe haven't quite yet. So yeah.
You're extremely polite.
Yes, thank you.
If I can just finish off, the final thing I was just going to say on section 6 on page 15, that just provides the opportunity to raise any questions from the October Pensions Committee meeting. So that was all that I was going to bring to your attention, but I'll happily take any other questions that there are. Thank you.
On item 6, because I wasn't able to attend because I was somewhere else, have you got anything to say about that, Dave? I mean, you were here for that committee. Anything to add?
No, I'm just trying to remember back, if I may say. I'm not suggesting I wasn't there or taking any notice, but I haven't got anything at the moment I can probably comment on, Roger. No, not off the top of my head, no. But if I was have. I mean, it was an interesting. I mean, we had a session at the end, didn't we, which was more of a training session, as such, which was quite useful. Roger, it was on, and I'm trying to remember what the actual title of the training was.
It was a presentation from Board to Coast on the strategy going forwards.
Which was I thought that was very informative as such. I mean, from a pension committee point of view, the meeting was very standard, if I may say.
Are there any questions to Joe? I've just got one question, if I may, Joe. On page 10, I'm delighted to hear that Peter's done the TPR's trustee toolkit. How many, dare I ask, how many pension committee members have still not done it? I think the board has a right to know, actually, because this is quite worrying.
So the new member that started in, so all the previous members had done it. The new member that started in in March, the academy rep did it. So we then had 3 new members, and none of those have yet done it. One of those new members has now left and is being replaced from the December meeting. So I contacted, I got this officially this week, so he's been contacted about the initial induction training, where that will be mentioned, the requirement to do that. However, he has been on the pensions committee historically, so we'll be aware of that requirement. So there will still be, when he joins, 3 outstanding, and we still currently have a vacant position for the scheme member representative, where expressions of interest have been asked for that position with a closing date of Friday, and I've had one expression of interest so far. So hopefully we'll be able to get that final committee place filled, and then that will be somebody else, so that will then have that 6-month period. So the 6 months, actually, because those people started in May, finish a quick count on the fingers, is to the end of November. But there have been prompts in the weekly emails and at each committee meeting to remind members that this is required. So if the board would like to raise that within their paper at the next meeting, then that will be helpful to us as officers to perhaps encourage members to complete that training.
Well, I'm pretty sure that you'd want that raising in the board report that goes to the pensions committee.
I would just say on that, I mean, I'd raised that, Roger, on my board report on your behalf. I did raise the issues about the training requirements and the importance that committee members did take that on board. I mean, I think as well, whether we're going to cover this, Joe, when we talked about at that meeting about bringing the training here into the chamber here, so we all undertake that together.
Claire will cover that in the training paper, if that's okay, Dave. Thank you.
I'll include that in the report. Are there any other questions, comments? No? So the recommendation is that we discuss the report and agree whether any action or additional information is required. Well, we've said that we'll report back to the pension committee that we have concerns over at least 3 and potentially 4 members of the pension committee have not done it. Okay, happy with that? Thank you. So item 5 is the Pensions Administration report. I think this is you, Matt. Thank you.
Thank you, Chair. Right, so this is West Yorkshire's administration report for the period 1st of April to the 30th of June. It seems some time ago. So on the report we look at performance and benchmarking. And the first area really to look at is the KPIs on point 1.2. Majority of them were met, there were a few that weren't. Just a general trend for this period seemed to be a combination of some annual leave, because it's people that carried over leave had to use it or lose it. Not ideal. Increased volumes of work over this period because we're going through the year end. We're preparing things for collecting the year end data and preparing annual benefit statements. And there was a little bit of sickness as well as a few vacancies. We've also looking at some of the older cases, so particularly with deferred benefits into payment quote and deferred pension setup. That's obviously just recording the level of the benefits of someone's left. Things like that are not priorities, so we would be prioritising perhaps payments and other things during the year. So we're now focusing on some of those older cases, but what that does do, it has an effect on the current cases, particularly when we've got high volumes. Most of these failures in this period occurred in April and May, and less so in June. I had a quick look back at the volumes that we received, and May was actually the second highest period in the year. So that sort of supports what we're saying. I don't see any worrying trends, something that continually doesn't meet, but obviously, like every meeting, I will keep an eye on that and report back if there's anything untowards. Looking to point 2.1 and the membership numbers, just a commentary really. You can see the bar graph there. Membership here at Lincolnshire has grown by about 9% in 2 years, which I think is quite significant because that with it will bring additional volumes of work. I don't think it's anything untowards. There may have been recruitment drives with employers. It could be that employers via auto-enrolment are re-enrolling those that have opted out earlier. Either way, I think that's quite a steady increase over a 2-year period, 9% across all memberships.
Matt, can I just raise one question on the table, the figures? Can you remind me what frozen and undecided means, and should we be concerned at the number of frozen? Because I seem to recall that is increasing.
Frozen is increasing. I wouldn't be worried about that at all, because frozen's it's an old terminology. It just means that someone is entitled to a refund. The benefits are frozen. Okay? The undecided leaver is more of a concern maybe, because that is where we may not know the leaving details. So we are still communicating with the employer to find out, have they left? Are they going to be a deferred benefit? Have they left? Are they going to be a retirement? Things like that. And usually what happens, we can put it in the undecided pile until such a time we get that information in, and then we know how to act, and then they become a deferred benefit, they're entitled to a refund, or indeed they're transferred out, and that usually happens quite quickly. So what we've got here is a period of high volumes of work where we may have a lot sitting in the undecided pile that will end up being a retirement or a deferred, and some that we won't know. Does that make sense? Yeah? Okay.
Sorry.
Go on.
Can I just clarify with you, just whilst we're on this section, Matt? Membership numbers.
Yeah.
Do they reflect individuals? So is there 26,500 members, or is there 26,500 records?
That's a good question. It's actually records. So it's not necessarily that membership or employment numbers are increasing by that amount. It could be that they may have a second job or a third job or multiple jobs. I mean, I know it's extreme, but I'm aware of members in other places who've got 12 individual current jobs. I know, yeah. But the thing is, whether they have one job or 12 jobs, it's still the same amount of work for the administrator and the same responsibility for the administrating authority, because now you have that responsibility 12 times to make sure that the benefits are administered equally and correctly on each of those employments. So yes, and some of those members might all be active, some of those members might be active and deferred, and occasionally you might have pensioners and active, pensioners and deferred. There is just a real mix depending on their age and their jobs, re-employments, etc. So, yes, it's not individual members. It is records that we hold. Is that all right? let's have a look. Looking to the satisfaction scores on point 3. Satisfaction scores are remaining high, 88.9% on the employer or the employee member surveys. Not too many responses. We keep pushing that. We'd like more responses from our membership, but we can't force them to, can't induce them to. We might get false results. Our employer training continues. It was five different events hosted by West Yorkshire for employers, all recorded. So they're all online, webinars if we like. They're all online and recorded so that employers can go back and view those at any time. Internal dispute resolution procedures, point 4. I'm sure these have come up before, these ones. The good thing, the headline event, is there are no new IDRPs, which is great. Which is great from an employer, scheme manager and administrator perspective. And the ones that we've got here have all been resolved. So on the stage 1 appeal, a decision on death benefits, it was turned down, because we followed the correct procedure, and it was about contacting potential other beneficiaries. But we have to do that as part of the process. And the stage 2 appeals, there are a few more, but it was more against the employer refusal to award ill health. The top one there, 3rd of October 2022, that was turned down because the member doesn't want us to release the benefits. I'm hoping we don't. I'm sure we spoke about that last time I was here in July, because that was still only just been communicated with. Then there's one on the 8th of January where there was a challenge about the benefits being incorrect or the values being incorrect. It was turned down, so they must have been incorrect, but there would have been something wrong with the process, because for distress and inconvenience a £500 compensation payment was made. And on 13th of February there was a case, delays in providing quotations for payment, but the appeal was just turned down, no additional information. We have 2 pension ombudsman cases, which I know have been here, but we're going to keep these on the report until we get an answer from the pensions ombudsman. They are extremely busy. I don't know when that response will be. It could be months, could be even years. Certainly, the member here was not happy about not receiving unreduced benefits and ceasing employment. They've already been through IDRP and that has not been upheld. Our response was sent to the Ombudsman on the 17th of March, and we've heard nothing since.
Matt, on that one, I'm not sure I fully understood the current position, that when it says the adjudicator at stage 2 carefully considered all the evidence provided and could not conclude from this that the employer had terminated the member's employment by mutual consent on the grounds of business efficiency.
Right. So, business efficiency, if it had been a retirement or a dismissal on business efficiency, would mean that if the member is age 55 and above, the benefits would be paid immediately and without reduction. So if we can't conclude, and that would be us as the adjudicator, West Yorkshire Pension Fund, West Yorkshire Pension Fund as the adjudicator, we couldn't conclude whether there had been a business efficiency case, because we work under instruction from the employer. And if they don't say it's business efficiency, then the benefits will be deferred or paid reduced. I can check further details.
Well, no, all I was going to say was that if you couldn't determine that, then it seems to me that this person's got a good case and the Ombudsman will rule in favour.
Possibly.
But then that begs the question, why did we let it go to the Ombudsman if in fact, the adjudicators kind of said, well, I don't know whether it is or not. It just seems a bit odd to me.
Okay, let me go back and check our wording on that, because if we can't determine, in my mind, that means that we can't pay it unreduced. However, it should be quite clear cut. The instruction from the employer is left, resigned, whatever word we want to use, or dismissed on business efficiency or retired on business efficiency. So let me just see if it's just our wording. I suspect it is, but don't take my word for it. I'll check that and I'll pass a note back to Claire or Joe.
all I was going to ask, Matt, I mean, in my day, forgive me, I'm looking back some years now, but the reason for leaving would determine the benefit.
Yeah.
Is that what you're saying? So voluntary retirement would result in reduced benefits,
Yep.
potentially.
Yep.
Or age retirement, you would retire, at normal pensionable age. But on the grounds of efficiency, it would either say that, wouldn't it?
Yeah.
Interest of efficiency of the service,
Yep.
redundancy, whatever,
Yep.
at age 55, or ill health.
Yep.
So you would process a benefit, if I may suggest, based on that instruction, wouldn't
Yeah.
you? So, but all I was going to then say, which you're going to come back to us on, but this is going back to March 22, isn't
Yeah,
it?
that's
You
right.
know, it's going back. We're coming into nearly a second year, aren't
I
we?
know.
And the Ombudsman has still not
No.
responded.
The Ombudsman doesn't have a time scale to respond, and they're really busy. So I'd hate to make a suggestion on how long I think it will be, but it certainly won't be this side of Christmas, I don't think. But you've both sort of made the same point in a different way, and I agree, because if that's gone through a stage 1 and then a stage 2, we must be aware, really, of what that instruction is from the employer. So I'm kind of hoping it's just poor wording on this report, but I will confirm.
I hope so, because the Ombudsman will rule in this person's favour. Reading that.
If I can just butt in, the stage 1 would have gone through the employer, so the employer would have turned down, because it's not a fund complaint initially if the employers decided not to unreduce, not to provide unreduced benefits. So I personally think it will probably be just poorly worded
Yes.
narrative, because the employer must have turned it down and said, no, you shouldn't have had them reduced. You should have had them reduced. And then it would have gone to the stage 2, which we ask West Yorkshire to do on our behalf. So I do believe it will just be poorly worded.
Yeah. Yeah, I should also add, I suppose, when we look at it at stage 2 as the adjudicator, we would have looked at the original complaint and the original response to 1, as well as the original instruction to retire them, dismiss them, whatever. So there's 3 bites of the cherry there. So leave that with me. Are you happy if I just email Joe or Claire and we'll pick it up that way? Yeah, brilliant. The last one, a member was unhappy that the employer did not award ill health retirement on termination of their employment. I've already challenged the wording on this one, interestingly, and I've actually looked at this case. So a response was sent on the 27th of January to the Ombudsman opposing the allegations, as it is an employer who determines whether a member is entitled to ill health retirement or not. So I know that now that the member is challenging the decision not to award ill health because they feel they meet the criteria. So I can guarantee you that last one there is just poor wording, because I think that's what we should have been saying there, is that the member has challenged the decision not to award ill health benefits, and as the adjudicator on stage 2, we feel that they do not meet. That's how that should be worded in my opinion. So I actually looked at that case.
And again, on that one, Matt, I mean, presumably there'd have been an independent medical advisor.
Yes, that's part of the complaint as well. They felt that the independent wasn't independent. I don't know them. So, yes, yeah. But certainly, sometimes with these kinds of complaints, second opinions are offered. And sometimes that's with another medical practitioner. Not that there's a huge pool, you understand, because they have to have experience of the LGPS or knowledge of the LGPS, so it's quite a narrow field. So I think both of those, perhaps we can look at a fresh set of wording if they appear on the report again next period.
Sorry, I'm just going to ask one question. I'm just interested, purely as this is ill health. The permanency test, I'm assuming, is still that you've got the stages. You've got, like, permanent ill health. You could have a tier 1, a tier 2, and a tier 3. Is that still very much a feature?
It is still very much a feature. So just to remind the board, a tier 1 and this is sort of layman's terms, so I haven't been doing this for a while, would be someone who is too ill to work today and not expected to recover from their illness or the condition by their normal pension age. So the pension that would be awarded would be the value on that day and full benefits to the normal pension age. So if they were 27 with age 67 retirement age, they would have an award enhancement of 40 years. It's a really good benefit for those people that will be unable to work again. Tier 2 would be the values up until the date of retirement and 25% of their prospective membership to normal pension age. So if we use the same 40 years, they would get another 10 year, they'd get a 10-year enhancement. It would be payable for life. The difference is that they would be too ill to work now, but would be expected to recover before normal pension age. Don't ask how a medical practitioner determines that. And then tier 3, they'll get the value of the day of retirement because they're too ill to work, but they are expected to recover within 3 years. Again, I don't know how an IRMP works that out. There is no enhancement and the pension will cease on that 3-year anniversary. It should be reviewed after 18 months and it could be ceased then. It could actually be uplifted to a tier 2. If we listen to the pension ombudsman over the last few years, nationally, this ill health process with the tiers generates 45% of the complaints that reach him or her. I'm not sure who the ombudsman is now. So it's not ideal at all. But what's quite pleasing here at Lincolnshire is in my 2 years that I've been here, there have been very few complaints off the back of ill health. So employers, you guys as the scheme manager and the scrutiny board, West Yorkshire, I think we're doing things that are right. I think.
Sorry, and the last question then here, Matt, is that this isn't an appeal against that I'm iller than you think. This is really saying I'm not ill at all, because there's no ill health pension awarded, whether it's a 3 or a 2 or a 1.
Yep.
It's that this is not about the level of illness. This is about you're not really ill, permanently ill at all.
Yes.
Is how I read it.
That's absolutely right, and that's I think why the complaint is A, about the employer, and B, about the independent practitioner, because they feel they meet the criteria and feel they have support from their own medical practitioners, GP, specialist consultants, whatever. I haven't seen that information. I've just seen the summary of the case. So yeah, even if the ombudsman agrees with them, you know, there's still the determination of what tier that would be. And so you know, this period, this complaint could go on for some time, or it will be completed when the ombudsman comments on it. So audits, we only had one about exiting employers. The rating was good, and any recommendations we've put into practice. As usual, I won't go through the budget, just to say that but we are on par with our budget forecasts this year and for next year. There are some small overspends and underspends on the breakdown. I think the trend is going to be that there won't be any, you know, reduction in costs because of the cost of living and the things about McLeod and stuff like that. But we do, you know, signpost this and explain this, you know, on a regular basis. So it's just really a summary of what we all should know. Shared service risk register on 5.4, I should just mention that didn't go to the meeting in September, but it's on my list of do for the next one. But we did include the document for you to look at. Shared on McLeod. This is quite an interesting one. Between the final salary schemes and the care schemes, there's a different requirement on the data that is needed. And for the older schemes, the final salary schemes, we would require hours and weeks, you know, that people work if they're part-time or they're term time or part-time term time. So we would need that, and we'd need their whole-time pay. Some funds, when the regulations changed in 2014, didn't ask for this information. But here at Lincolnshire and West Yorkshire, that has always been collected. So that when we were preparing for McLeod and the removal of age discrimination from 1st of October this year, we had that information there. We were all in a good place. We did ask all employers to provide an updated set of information for the period 2008-2014 and then beyond, as in up to date. And most, well, at least many, didn't provide us with that information. So it left us with a bit of a dilemma. Do we then just import all that data and accept it, or do we say, that information that has been provided through the years has been validated? It has been communicated to all those that are still active on their annual benefit statements. If people have retired and had their pension or left and had a deferred benefit, again, it's all been checked and validated. So the decision was taken, and this was checked to be, satisfactory, that the data that we hold and have been provided is correct. So we didn't need to have all that information. And that meant we did a significantly less piece of work than some of our colleagues. We were in a much better position than other funds. And really we can just concentrate on the delivery of McLeod rather than checking the data, because we thought it might have thrown it out. Yeah, does that make sense? Because we would have had different staff at the employers looking back over the historic records. There was a risk that the information they provided wasn't going to be correct and maybe different. So it was better to go with that had all been validated at the time. So hopefully that makes sense. Shared service refresh. All the partners at the shared service met and we discussed an update, if you like, to our agreement or contractual agreements. I've already rewritten that. It's with Assistant Director Eunice Gedra. It's also still got to go through legal and have all the data protection stuff checked. Although I've gone through and looked at it in my capacity, I'm not the expert. So I will give him a little bit of a nudge and then we'll get some draft copies out to the partners. An ISP provider is the next point. This is the integrated service provider for pension dashboards. And we've awarded this to Bravura. We went through a full tender. We thought it was quite good. We were awarding not to our software provider, so there's no monopoly on our systems and things like that. So we're in a better place than many pension providers in the country, and when we get our new staging date, and I think they're going to be released on the 14th of November, this is a very much a closed shop at the moment. There's been nothing leaked, so we don't know what it could look like. All we know is that we need to be on the dashboard at the moment by the 31st of October 2026. But we are in a good place. What I would like to say with this integrated service provider, I hear a lot of people consider that or think that when we go live on the dashboards, that actually our data is going to go on a dashboard. The data doesn't move. It stays on the servers at West Yorkshire Pension Fund. And what Bravura do is they're like our doorman. They will open the door when a member comes to us through the dashboard and says, I am Mr. Jones and this is my national insurance number, etc. If the data all matches, then we allow them access to that record, or at least what we want them to see, which will be the pension values, normal retirement date, stuff like that. If it doesn't match, or even partial match, but it's not good enough, it goes back to that inquirer, and then they have to provide further information. So as far as data security is concerned, that data stays with us all the time, and only after these security checks can people access it. So I don't know if that is news to people here, but I find that people seem to think that data is being moved elsewhere for the purpose of the dashboard, and it's not. Annual benefit statements, well, they seem like a long time ago now, but for the actives, we managed 99% of those that we could send, and 100% of the deferreds. And on the regulatory update, which I won't go through any detail, the SCAPE rate, the superannuation contribution adjusted for past experience, discount rate, it affects all the factors in all the calculations. And over this year, since the spring, they have been suspended and replaced, depending on which calculations they are. And even today, as we sit here with certain transfers, they're still not functioning as they should do because we're having to pause the process because we still don't have all the factors. So there will be a knock-on effect through future KPIs. And I think that is probably it from me. So is it on that paper? Any other questions?
Yeah, I just wonder what the current status is with the AVCs. Is there still delays with Prudential? Because somebody I know retired, it took 3 months to get their pension because of the AVC delay.
Right, I'm not aware that that issue has completely gone away, but your example is the first example I know where someone had to wait. So I'd be interested to know whether that is the issue with their disinvestment of the funds, which was a systems issue that they had historically, or it was something else. But to my knowledge, certainly they are better than they were. Where there have been issues, real issues with scheme members, they have compensated. So they have either adjusted the values of buying or selling their units, or they've actually made another payment. And I know that, and I'm sure there's a meeting with the AVCs, with Prudential in the next couple of weeks. So we'll have an update there. I mean, if you want to provide me with that example, then I could look at that and get a further commentary to come back to the board, if that's useful.
Could I just add to that? My understanding with the AVCs at the moment is the only time we've had issues have been where individuals have had higher amounts in their AVC than the tax allowance. So there's been issues with getting where you generally get it 100% back tax-free, but it's up to HMRC limits. So I know we have had a couple where those limits have been breached, so there's an issue with what they do with the additional element of AVC. Other delays that I've been made aware of have been on the employer side with getting the final pay information through, and it's part of a wider issue with if it's an LCC one, with the payroll provider and providing the full information required to do the overall pension benefit, not specifically on the AVC or in sending across all final AVC payments. So as I say, probably backing up what Matt says, I'm not aware that the issues we had a couple of years ago, was it 2 years ago?
Might even be 3 now.
Yeah, are there now, but there are certain specific circumstances that are quite unusual that will always take a bit of extra time because there's additional decisions that need to be made. So, you know, if it has been an issue that the individual does want to get in touch, we can find out some more detail on that.
So will you liaise with Joe on that one? Yeah.
If I may ask, Matt, this, and I fully understand and I appreciate the reasons why the KPIs are being stretched a bit at the moment for you. Just so I'm clear, or to clarity, please, if I take just the two of them, the deferred benefits into payment quote,
Yep.
and then the deferred benefits setup ones, the ones that perhaps are testing you at the moment as a team, the ones that missed the deadline or the KPI,
Yep.
do they get the priority in as they come round the group again? So you get 1 month and you missed
Yep.
the KPI by however many. So we move to the next month, then to the next month. Do those that are sort of already in the system get priority?
Yeah, and I think that's what's having a knock-on effect really, because if you missed on that, say that first month, then you're going to be next in the queue for the next month because you've got rid of everything that's older. I think the problem is if we can't get them done in the volumes quick enough, everything's going to be that little bit older by the time we get to do it. The thing to stress though is even if the KPI doesn't meet the deferred pension to set up, we still send that letter so that that's the statutory requirement within 2 months of the date of leaving or us receiving the information that says you have a deferred benefit. The bit that comes later that keeps missing the KPI is the values that we're sending out. So statutory, regulatory, we're on it. When it comes to those deferred quotes, it's the quote that's missed the KPI, but again, there's no payment. When we come to deferred into payment, they are actually being paid within the required statutory time limits, which is very simply the payday after retirement, or the electing date, or whatever it is. So we have some work to do on this, which is generally because of volumes and staffing, whether it's illness, holidays, new people being trained, etc. But we're not dropping that baton on dates of payment and things like that. Okay, I mean, that's why coming back to not having any IDRPs and very few complaints reflects that statement. That doesn't mean to say that we're not continually finding ways and considering how we can get the KPIs up and just move that work on.
I suppose really what I'm asking, sorry Joe, I was just going to say, there isn't like another backlog somewhere tucked away that it's being worked on outside of the KPI?
Not to my knowledge, because that was one of the considerations when we worked on the KPIs, which was 18 months ago, is that if we actually said this is a backlog and this is current work, you do risk that if the current work has huge volumes or we have resource issues through sickness and other pandemic, whatever, we end up with 2 backlogs and still the work coming in each month. So it is still together. It is still together, and I said at the moment we then work the oldest ones and then bring it all the way through. So the priority is, as you say, if we miss this month, you're going to be the next priority, but you're going to be that little bit older or just past the KPI.
If I might just come in on that, one of the things that was asked at the Pensions Committee in October was that the resource plan was brought to the next meeting of the committee, and then it will also be brought to the next board meeting in January, which will give some idea of how they're addressing some of these areas. The other thing that we've been asking for as part of the shared service meetings and at the collaboration board is perhaps to have a little bit more transparency of what is a backlog, at what time does something become a backlog as opposed to just outstanding work. So there is some more work that's looking at being done just to provide that information in a more transparent way, just so that things can be monitored more easily by the shared service partners. So I thought that might be useful information.
Any other questions? No? The recommendation is board discuss the activity and performance of the administration service during the last quarter. Well, I think we've done that, raised a few questions, and Matt's got 1 or 2 follow-ups. Okay, thanks for that. You again, Matt, temporary bank accounts.
Temporary bank accounts, thanks, Chair. Okay, so there are 2 areas really that we're concerned about, and that is refunds into payment and people we have lost contact with. So what we do, let's look at the refunds first. With the refunds, somebody has left their employer. For whatever reason, we have been unable to pay a refund at the time of leaving, maybe because they haven't sent the forms back, maybe because immediately they've moved on, we haven't got the current address. Our regulations aren't particularly helpful at the moment because they demand that we pay these refunds to members by a 5-year anniversary of leaving. And of course, that's not quite possible. However, to identify those monies, to put them to one side because they're not Lincolnshire's, they're not part of the fund technically, they belong to these members. They're paid into a bank account, a temporary bank account, because at some point we should be paying these benefits out. What we can look at, because I had a look at the figures, what we can look at is in this year we've only opened 4 accounts, which I think is really good, which means we are managing to I'm going the wrong way, that's pensioners, sorry. We have only opened 42 accounts, which is still pretty good when we look at the previous year at 203, but we haven't closed too many. Now it might be that many of these people in the Lincolnshire Fund are not reaching their normal pension age when they would usually wander back through the door and say, do you owe me some money? I've looked at the average value of these refunds and they're about £153, £154. So they are not huge, but you do have now over 91,000 sitting in the temporary bank account with almost 600 different members entitled to this money. The other area where we hold temporary bank accounts are where people are due payment of their benefits. Now, usually this would be deferred beneficiaries. They left the local government early with and too young, if you like, to receive payment of their pension. Once they reach normal pension age, we would expect people to either claim them or we would be writing to them to say you have this pension. Again, we've lost track of them, don't know where they are, or they are not responding with election forms. There's various reasons for that, social, economic reasons, but we can't force people to have a pension if we don't have the ability to pay them, i.e. their election bank accounts, etc. So going back to my earlier point, I was slightly wrong, that we've only opened 4 this year, which is really good. We haven't closed any this year, which again suggests to me that there aren't anybody reaching normal retirement age, or at least they haven't so far. 26 currently open for about £41,000, so that's an average of £1,579. Now that doesn't sound a lot as a pension, but obviously that's, you know, it's over £100 a month, someone's income and entitlement for the rest of their life. We really are quite keen to find these people. We do periodically trace them. We also, with the National Fraud Initiative and stuff like that, and Tell Us Once, so we're not just tracing people, we're looking for the people that have passed away. We're doing everything in our powers to try and trace these people and get them to make their elections to receive the refund or the pension. Any questions?
Question, Matt. I guess looking at Appendix A, I was surprised that in number 18, 13,000, and then, you know, there's a 6,000 and 5,000, and I don't know, I just find it, and I know it says that sometimes they don't want it because it will affect their benefits, but I would have thought, you know, do you want to give up 13k? I just find several of them surprising. The under probably 2,000, then I can't get excited about, but the larger ones, I just think maybe we should do a bit more.
Yeah, I mean, certainly the tracing had been stalled, paused, the pandemic, and particularly where we go and visit people's addresses and knock on doors. But I'm not sure what else we can do, particularly if they do live at these addresses. I don't know if the dashboard may help us in future when it goes live, because obviously that's active and deferred members will have their data put on the dashboards, and as these people aren't having their benefits paid, they're not technically a pensioner, even though they're the appropriate age. Will that help? Will that spark them into it? Certainly there'll be transparency across the country. It won't be so easy to refuse pension benefits where everybody can see if you do have them. I'm talking state benefits and entitlement to means-tested benefits. Maybe that will help us get these paid somehow. I live in hope, but I'm not sure what else we can do. Any commentary?
Case in point, on the 13 grand one, I just wondered whether you could perhaps get your guys just to tell us what action they've taken on that one. I mean, has anyone been to the door? Have we got a current address? I mean, if they say, well, yeah, we've been, and they don't want it because they're on state benefits, then fine, you know. But I just find it a bit unacceptable, really.
Yeah, I totally agree. We can't force them, even though. But I can ask that question. I can drop an email back to Lincolnshire and just sort of say what that is. And I'll see if we can get a little update on where we are with the processes, the door knocking, etc.
And I've got one other question, which is probably a bit unfair on you, and it's probably aimed more at Claire and Joe. So we've got these amounts that have come out of what I call the P&L account, the I&E account, and I just wonder, do these appear in the balance sheet as a creditor then?
West Yorkshire make an adjustment for us in terms of their recharge to us in the very final payment of the year for overpayments and various items like that. So, yeah, they will sit on the balance sheet. Yeah, because they're money which is in effect in our account but doesn't belong to us. So yeah, they'll sit in creditors along with any other items which West Yorkshire are telling us about.
Look, the reason I ask is, and it's probably with my audit hat on, that if you've not got really good good internal control systems, these are great for fraud. And
Sorry, can I just go back just to the 13,000 case we were discussing? When it says date open, 28th of November last year, is that when the benefit in this case was due to be paid from?
Yes.
So I'm assuming this could have been, I suppose it could have been a deferred beneficiary, couldn't it? But all I was going to say is that if it was from employment, and it was less, it's not long since that relationship was still in place, was it? Not with you necessarily, but with the employer. This is probably a deferred member then, you would think.
I would expect them all to be deferred. I mean, there is an outside possibility that they've gone from active, retired, and realised that actually they might be able to get more money from the state if they don't accept it. But that's quite rare usually, I would say. And because obviously the employer, former employers talk to them, we can talk to them, we know their address, we can confirm everything at that point that they're leaving, or we should be able to. So it's a very different conversation to someone that perhaps we haven't spoken to for a decade or two, and we can't be certain that they're still at that address. It does seem quite high. The chairman's comment that if it's only opened on that date, I haven't got the screen up to see it, but if it was opened on that date, that's quite a significant amount of.
But surely that date is 2 years after they could have taken it, not when they were just retiring.
Well, that's right. It could be 2 years because you've got to put it.
Otherwise, because presumably you don't pop them into this interim bank account until after 2 years.
Well, that's right. We need to make a decision within 2 years on these payments. Otherwise, there's a whole heap of other things that could be an issue.
I mean, forgive me, but I thought you said today that date of November 22 was the date that they could have retired. I see it as 2 years 2 years prior to that.
Yeah. No, I would agree with that, but because it's before we make the decision within 2 years, otherwise you've got issues with taxation. So you're right. Sorry about that. But I can check as well.
Sorry, Mark.
So with these temporary bank accounts, obviously, I mean, do you ever sort of reach a stage where you try and you just cannot trace them? So how long would you sort of allow to trace somebody, and then presumably if you can't find them, would you ever write it off, or would you still keep it there as a potential liability that somebody might at some point in the future come back and claim?
This is a concern of mine that I've raised at various points. The National Fraud Initiative and things like that, and tell us once, we will ultimately find if they've passed away. So we do get an end date. So I'm quite happy where they are UK based that we'll be able to stop the payments. If they're overseas, there's a bit of a risk. However, like we've said, if we don't know where they are and we can't trace them, it's an issue. We can't put an end date on it. If we know where they are but they're not making an election, we can't put an end date on it, but we're more likely to find out that they've passed away. So it does need some consideration. We can't do anything with the money because it's not ours. It's not Lincolnshire's, it's not West Yorkshire's, And it's not, in that respect, that's a concern around all the financial services from banks, etc. One of my former employers back in the 90s had a £1 billion fund of unclaimed life cover and assurances. And they went to government to ask them if they could reinvest that money because these policies went back decades and decades and decades, and they were quite clearly told no, and that problem still exists today. So it is a concern, and I've raised it internally because I think we probably need a bit better governance around it, but we haven't got the answer yet.
If somebody has died, if they've left a will, potentially that becomes anything that's becomes part of the residue of their will. So at some point in the future, because I mean every week or so the government does a list, doesn't it, of all the unclaimed wills or whatever in the country. Yeah, all those. Yeah. So potentially in 20 years' time, a long lost nephew could come and say, "Oh, that was my Uncle Fred." And
yep, that's exactly right. So it's not our money to spend. It's not our money to make a decision on either. You can give it away to charity. We can't do anything. It just must sit there, unfortunately, until someone walks out of the woods with a legitimate claim. And that could be the scheme member or their beneficiaries or a long-lost family member, because there will be an amount of pension that's still got to be due, possibly a lump sum, and there could also be dependents' benefits payable thereafter as well. We don't know. So I believe we've got a little bit of work to do just to tighten up the governance on it, but it is a bit of a concern of mine.
Just a final question. Do all local authorities, or local authority pension funds do what you do?
No.
No, I don't think so, because they certainly don't do this in the private sector, do they?
No. They would leave these figures undetermined. So we've made a decision based on probably a moral obligation to identify the money. I think there's some very good things about it. I mean, first of all, the money's been identified, so whenever we pay it out, it's there, the work's been done. I think it's quite useful from your report on accounts that you identify this money that's you can account for and justify. It's the act of the bank accounts that sometimes feels awkward and cumbersome, if that makes sense to me.
I think the other point there is it's doing what's best for the scheme member at the end of the day when they do come forward, because then they don't get that, huge unauthorised tax charge. Yeah, so it's always trying to see what is best for the scheme member. But just as an anecdote, I have been contacted previously, it's a few years ago now, by an individual that was very annoyed because she kept getting contacted by WIPF to tell her that she was due a pension. She did not believe she was old enough to have a pension. She didn't want to hear it, and she just wanted it to go away. So as bizarre as it sounds. And then I've also had questions from other people thinking it's a scam and wanting more clarification. So I think there's a lot of factors in there. And of course, some of these people, it may not be as easy for the West Yorkshire team to go door knocking, because they could be anywhere, in the UK or outside of that. So it is a difficult one, I'm afraid.
Sorry. Matt, I was just I was just thinking this one through. Going back to this larger one again, can you just say I don't want it? And that, can you just sort of, if you're getting benefits from the state and you're saying, well, I don't want it because I'm going to be worse off, can you just say that?
No. It's as simple as that. I mean, the legislation and our regulation is quite clear. You have an entitlement, so therefore you have to receive payment. And that's what causes people problems, because they say no and it can almost go under the radar so they can get these benefits. I mean, I'm not in their shoes, and I'm sure they don't take the decisions lightly, but it seems it's morally questionable that you have an entitlement and then you're going to the government to get more money. But maybe the system doesn't work properly for these people. I don't know. You don't have that option. You can't even sign it away to charity, because it would still be counted as earned income. It's your personal money, your personal taxation. So it's yours.
So I'm thinking it through. Sorry, it's interesting, and I'm just thinking it through. You'll know their date of birth, so you'll know their state pension age. So at state pension age, benefits in some respect from the state would stop, wouldn't it? You might still get pension credits, but certain benefits, like I'm assuming universal credit and things like that, would stop and to be paid because the DWP aren't paying them, or you're not entitled to them. So can you not then go and reach out to the Department for Works and Pensions and say, we've got this member, reached state pension age, can you tell us where they are?
I don't think they'll give us the information. I don't think.
What they're doing?
I don't think so. I can go away and ask the question, and why would they give us that information just because we asked for it? Because we're not linked up, we're not joined up, we're not partners in that respect.
I was only thinking about, it's not fraud in the sense, is it? But
yeah, and there is a rule of deprivation, isn't there? I think nobody talks about the rule of deprivation. Have you not heard of it? If you spend, give away, or lose, as in transfer, etc., your pension, yeah, that will be taken into account for mean-tested benefits. And I don't mean taken into account because you haven't got it, you'll get more money from the state. It's the reverse. If you've actually deprived yourself of this, they will consider that you've done it on purpose. You know, you've thought it through. It's an act that you have entered into to get more benefits from the state. So, you know, if we contact the DWP and say there's a pension here that hasn't been paid, or we'd like to pay it, you know, that's the connotations there are going to be quite large. Do you remember the Freedoms and Choice of 2016? That's when the rule of deprivation was brought to my mind because of this thing about transferring pensions en masse to other schemes not as good as ours and then losing the money. So even if you were scammed, the law of deprivation could still prevent you from having mean-tested benefits. And of course, our benefits could be paid before normal retirement age for some elements of the scheme, so from age 60. So there could be 5 years, maybe 6, maybe 7 years of pension benefits that would affect anything before their normal pension age. So it's a very complex area, and I'm not sure contacting the DWP and having those conversations would benefit anybody. You know, it's not a bad idea as such, but I think I can't see any winners.
I was only thinking that if you're trying to trace them back, if we've got an obligation as a pension fund to trace a lost member, and you're going through those processes, you use a tracing agency and that. I take it then what you're saying is the Department for Works and Pensions don't see themselves as a tracing agency.
No. I'll put a note on my pad just to see what the team get anything else from them that I'm not aware of, but I would suggest that they're not part of the process.
No, okay.
Are you not part of, like, I know employers give information for their employees under the National Fraud Initiative or something. Does pensions not come into that? Do you not tell them about the pensions?
Yeah, the NFI is part of pensions, so I think that's September when we usually get it. It could be any month, and of course to tell us once where if people have died. For all the public sector bodies, we put it up there, don't they, online, and everyone can get access to it. So there is some joined up thinking on that level, but outside of that, I'm not aware of any, which is why we employ tracing agencies and go and door knock.
Yeah, I was just thinking for fraud, because benefits and council tax benefits, they check that to see if the person's entitled to money. So.
Right, I think we'd better leave this one at this point. So, interesting debate that. In terms of the recommendation, is the board discuss the report and consider whether they wish to take any further actions? Well, we've already said, Matt, we'd like a bit more information on the 13K
Yeah,
one.
got a
That's
note of
okay. Okay, thanks for that. So, risk register annual review. I think this is you, Jo.
It is, thank you, Chairman. So there haven't been any changes to the risk management policy, which is attached at Appendix A to your papers. And following the full review that we did last year on the new risk register, which is shown at Appendix B, there haven't really been any material changes overall to that either. Any new risks or changes in scoring are brought to the committee and the board quarterly as part of the fund update paper. And probably the main change to mention since the last meeting is on risk P1, which was the loss of key staff, where a long-term absence and a lack of resources was a major concern. I'm very pleased to say that we have been recruiting to 2 new posts and have been able to appoint to one of these posts. So you will know our colleague Josh Drotliff in the team, who has been promoted to one of the new posts, and I'm very pleased to say that my colleague has returned to the team, as you can see. So we're hoping that that risk will continue reducing going forwards. We'll be looking to go out probably next year for that second post again, to give Josh time to bed in and enable us to ensure that there's time to do the training and induction required, and plus also backfilling to Josh's post. Paragraph 4 on page 64 just sets out the risks across the 4 areas of governance, of investments and funding, operational and people. I wasn't planning on going through each risk, but I will happily take any questions that you may have. Thank you.
Any questions? I've got a couple. Sorry, Joe. On risk G1, the direction of travel there is upwards. Given what you've told us about the Pensions Committee, 4 members, etc., is that reasonable?
I think in looking at it collectively, in what we do, we have had a huge changeover. With the introduction of Lola, don't shoot me down for saying that word, there's a lot more ability for our committee members and board members to do their training themselves in the time they have available. We're offering a lot more. The way we've reconfigured the meetings allows that training element now into 8 meetings a year rather than just the 2 committee meetings. So I think that's why we're saying that it's improving. You could say at the moment, at this very snapshot in time, given that we've had a lot of new members that haven't potentially done the training yet, but are still within that 6-month window. And for Lola, it is a 12-month window. So at this point in time, I wouldn't like to say that it's going backwards. And I think the things that we have put in place, so particularly the new agendas and additional format of the meetings since June, increases the ability for both board and committee members to increase their knowledge.
Okay. I get concerned that there are. I can think of at least one new member who has not yet appeared at a pensions committee, and let's leave it there. I despair at times, but I'm sure you do. Yeah. On number 12, talks about poor long investment performance or non-compliance from managers. And maybe this is the wrong place to put it, but I did wonder whether that we should have a risk then about the threat of a forced merger in terms of pooling.
Yeah, I mean, that's obviously something that's very current. We're yet to have feedback on the consultation that closed last month, 2nd of October, I think it was. We may yet hear something more in the autumn statement, and I think it might be worth waiting until the outcome from that consultation to see where government might be heading with that, because there was a lot of feedback to that consultation about forced merger is not the answer. So if you're happy, I will just keep that on the back burner until we see the outcome of the investment pooling consultation.
Yeah, no, I'm happy to leave it. Any other questions on the risk register? No, so recommendation is the board review the risk management policy and review the risk register. Happy to accept that recommendation? Board agreed? Yeah, thank you. Very good. All right, border to coast. Are you going to talk to us before they come on, or?
If I can just do a really brief couple of lines so that Border to Coast can realise we've got to their paper and perhaps turn their camera on, ready for us, and we can just switch across to them. So this is just after a request from the board that we could actually invite them to come and talk about their annual report and accounts and to answer any questions that you may have. Now, there have been some questions that were fed through previously that Milo and Neil from Border to Coast will cover, but I won't talk anymore. I will just hand you straight across to Milo and Neil at Border to Coast. We'll run the presentation this side. Milo, if you can just let us know when you'd like each slide changing, please.
Brilliant. Great. Thank you very much, Joe. Hopefully everybody in the room can hear me okay, but please do let me know if not. So good to see you all this afternoon. I'm Milo Kerr. I'm the head of customer relationship management at Border to Coast. So I lead the team that's responsible for the day-to-day relationship between Border to Coast, Lincolnshire, and the 10 other partner funds that we represent. So I'm pleased to say that I'm here joined by Neil Hawkins, who is our head of finance. Neil is here to share any of the technical detail or answer any of the more technical questions that you may have. So I'll present for around 20 minutes, starting on just giving a bit of a recap on our overall business model and strategy, then coming on to highlights from our 2022 to 2023 accounts, and then what our strategic priorities have been for this year so far. So firstly, turning the page to slide 3 in the pack. So moving on from the agenda, if that's okay. So a quick recap here. Border to Coast was created with a vision of making a difference for the LGPS. So we are here as a result of 11 administering authorities, Lincolnshire being one of them, coming together to pool their pension scheme assets. And we're referring to each of those individual authorities as our partner funds. Our overall mission is that through pooling, we will provide those administrating authorities with a stronger voice when it comes to their investments, and work with them to deliver cost-effective, innovative and responsible investments that deliver sustainable investment performance over the long term. Now, there are 3 core pillars to that mission: the investment programme, the corporate programme and the people programme. So the investments, that is the funds and the solutions that we offer to our partner funds and that we build in collaboration with them. The corporate, so the operational aspects of the organisation, and then people, how we create a sustainable and a diverse workforce. Those pillars are managed within a robust risk framework and also structured around governance, which stems right through the organisation. Now, we know that the most important part of any structure is its foundations. So I've been recently going through a house renovation. I can certainly attest to that. So fundamental to all of this is our culture, a culture of being a customer-focused organisation that is collaborative, that's sustainable, and that operates with integrity. Now, we aren't just another investment manager. We exist, as I've said, for the sole purpose of supporting your investments and the investments of the 10 other partner funds that we represent. Those partner funds, Lincolnshire included, are not only our customers, but also our shareholders. And that makes us very unique as an asset manager as well. Now, we'll come on to talk about the finances for 2022-2023, but to add context to that, we aren't here to necessarily make profit as an organisation. In fact, we're not here to make profit as an organisation. Our interests are solely aligned with the goals and objectives of yourselves, and that's of the 11 partner funds. So moving on to the next slide, who are the other partner funds? Who are you in partnership with? And a quick recap there. If you look at the other pools that are across the country, So this is showing you all of our partner funds, the 11 that we represent, and where they sit in the country. Now, if you look at the other pools, generally they all focused around regions. So you've got the London pool focused on London, Central, Brunel in the southwest. Yes, Border to Coast has a strong contingent in the north, as you can see there, but also areas of other areas of the country that we represent and that we work together with across Warwickshire, Bedfordshire, and south of London in Surrey. So each of those partner funds didn't come together out of regional formation or regional preference. It really was out of having a very shared and common view of how pooling could best work for them and wanting to be in control of their future and a shared culture and a shared vision for what they wanted to achieve. Now, each of the partner funds that you see on this slide, so Bedfordshire right the way through to Warwickshire, they're all of different sizes. They've all got their own unique member bases, their own unique employers, but each of them own an equal share in the organisation. And that was very important to when Border to Coast was established, that idea of one fund, one vote. So no matter how big you are, no matter how small you are, you have the same say across the organisation. On the next slide, before I come on to talk about the end of year position, a quick recap on governance. Now, I appreciate this diagram will look somewhat complicated, and in all honesty, it is. So there are a lot of stakeholders in a complicated ecosystem, and this aims to illustrate really how they all interact and how they exercise oversight. So in summary, there are probably three key bodies that work very closely together to exercise oversight. Firstly, the pensions committees. And so each of the administering authorities has its own representative, which sits on what is called the joint committee. Now, that's normally the chair of the administering authority of the pensions committee, which is the case for Lincolnshire. And that joint committee, as I say, has one rep from each of the 11 partner funds and meet on a quarterly basis with Border to Coast. The second of those oversight bodies is very much the officers. So that's very much a day-to-day relationship. Myself and my team will be speaking to the officers on a very frequent basis, but they also meet formally on a quarterly basis through the officers operations group, or otherwise known as the OOG. And then the third that I'd comment on is the shareholders. So as well as each administering authority having a pensions committee rep on the joint committee, they will also have a shareholder rep, and typically that would consist of the section 151 or senior officer. And those shareholders are represented by an independent Border to Coast board. So there is an independent board that has been appointed who are carrying out that oversight on behalf of shareholders. Now, coming to where we currently stand and a recap, an overview of 2022-23 on the next slide. So we've come a long way since launching 6 years ago. And this gives an overview of each of our propositions. So at the end of March 2023, we had 28 billion invested across equities and fixed income, and a further 12 billion of commitments to our private markets programme. So that means on behalf of our partner funds, we are responsible for about 40 billion. Now, those 11 partner funds, their total assets are about 60 billion. So that means that we're responsible for about 2/3 of their assets. Now, that makes us extremely impressively the largest asset manager outside of London and Edinburgh. Having launched 6 years ago, that is an incredible feat. So Lincolnshire, at the end of March 2023, had about 1.6 billion invested with Border to Coast. So that's across the UK listed equity fund up there in the equity box. Most of their assets invested in the Global Equity Alpha Fund. So in the centre at the top there. Multi-asset credit within the fixed income space and investment grade credit. So across those four, Lincolnshire had about 1.6 billion invested at the end of March. Now, Lincolnshire don't currently invest in our private market solution, those in the bottom right there. You have a fully managed solution for private markets currently managed by Morgan Stanley. Some of the operational aspects of that arrangement that you have with Morgan Stanley, we currently can't replicate, but we are working very closely and exploring possibilities to introduce that to our capabilities for 2025. So huge progress in terms of launching and continuing to manage our investment propositions since launch. On the next slide, we bring out a snapshot of some of the other highlights from our 2023 annual report. Now, things have moved on further from there, but largely this is reflective of the position that you see today. So our office here in Leeds is home to about 140 colleagues. And as you can see there, 94% of those colleagues say that they are proud to work for Border to Coast. That's an incredible statistic. If you look across companies in organisation, about 65% of people normally say that they're proud from where they work from. So it's really great that we have that collegiate and collaborative and proud workforce here at Border to Coast. In 2022, we estimated that we made 14 million of savings for partner funds. So if you compare to what partner funds would have paid under prior arrangements versus pooling versus where they are today, we estimated that last year 14 million in savings, and cumulatively since launch 65 million in savings across partner funds. We've been recognised in the industry as leaders. So last year we won an award for our contribution to diversity and inclusion, but also we were named Pool of the Year, and we have been named Pool of the Year 3 times at the LAPF Investment Awards. And this year they actually got rid of the Pool of the Year award, some might say because they couldn't keep giving it to us. They replaced it with the Innovation of the Year, and we won it, which was great. On your behalf, we vote on around 13,000 shareholder resolutions every year, and the scale that we get through pooling gives us greater clout at those votes. And last year we published our roadmap to net zero as well. Now, none of this would have been possible without the collaboration and the commitment and the work of the 11 partner funds that have been along this journey with us. We work very closely with them, continual workshops in terms of reviewing performance to date, but also on future launches. And last year alone had around 160 meetings with our partner funds, which I think is really testament to how much this is a partnership and how much we are working together. On the next slide, touching on the financial picture. As I said, we don't set out to make a profit. We have a cost base, which is the cost of running the solutions on behalf of the partner funds. And in any given year, we charge our partner funds based on how much we expect that cost to be. So we're not looking to generate a surplus or a profit there. As you can see, last year's costs around 25 million. That was an increase from 2022 as we launched more solutions and the services that we provided to partner funds grew. Partner funds paid across 26 million, which is split across a number of categories set out on the right-hand side on this slide. So there are some areas where partner funds share costs based on a 1/11th basis. So, for example, governance associated with the organisation, strategic projects to everybody's benefit, they're shared to the basis of 1/11th. In terms of the cost of your investments, so the investments team, the research team, for example, they're split based on how much each partner fund expects to invest in one of our solutions. So, for example, as Lincolnshire don't invest in our private markets capabilities, they don't pay for the specific costs of those private market commitments. On the next slide, from a balance sheet perspective, so it's not the most exciting of balance sheets. Neil, don't take offence to that. I would say that the key asset here is around capital reserves. So as a regulated asset manager, we have to hold a level of cash, a level of risk-based capital, liquid assets on our balance sheet to service as capital reserves. Aside from this, we have small assets, small amount in fixed assets, but the balance sheet is mostly made up of that liquidity for reserve purposes. So turning ahead on the next page, strategic priorities. So from an investments perspective, key priorities for 2023 have been to work towards the launch of our real estate capabilities. We are very soon to be launching our global real estate solution, and next year we'll be launching UK real estate. So there's been a lot of work going on to launch those solutions, which will effectively be the last building blocks that we set out to launch when Border to Coast was formed. We're also further evolving our approach to responsible investment and climate change. And other highlights in terms of 2023 have included strengthening our risk framework, introducing an enterprise-wide risk model, as well as looking at other areas where we could perhaps benchmark Border to Coast performance versus other pools or asset owners. Now, not reflected on this page, but the final piece that I'll touch on is the work that we have been doing in considering our strategy for 2030. So looking a bit further afield, how would pooling, how would Border to Coast, and how would the LGPS look in 2030? So a working group of representatives from partner funds have been exploring what change the ecosystem of the LGPS may see in the years to come. So ranging from a stronger stance from central government on pooling, which we have seen through the consultation, changes in the investment landscape, and also how the pensions consultancy industry may change in the years to come. From this, that group of partner funds have been considering what challenges that might create in terms of resourcing, greater governance requirements, greater reporting requirements, a need for more income, a need to potentially be more dynamic in their investments. And they've been considering how the partnership may need to evolve to effectively address each of those challenges, which has involved a great deal of work across the offices and also learning from other international best practice. So that work will continue into 2024. It's an area that we're really excited to explore, hoping to make further progress on setting that out in the first half of next year. And that's an area that Joe will certainly be heavily involved in from Lincolnshire. That's all I was going to cover as part of the slides. There was one other question that came up prior to the meeting, which was around Lincolnshire and their involvement in the Scottish Limited Partnership associated with Border to Coast. So there are 10 limited partnerships that sit within our structure. Each of those are for our private markets capabilities. And because Lincolnshire don't utilise the Border to Coast private market capabilities there isn't a limited partnership arrangement with Lincolnshire there. So hopefully that answers that question. On the final page of the pack, there are some links to some further resources. So the 2023 report and accounts in full, our corporate reports, and also any other publications that we have. Happy to stop there and answer any questions.
Well, thank you very much for that presentation. Are there any questions? Can I just ask on you know that headline £65 million in cost savings? Can you just perhaps elaborate on that a little bit more, please?
Yeah, I'll pick that one up. The government, the LUHC, expect or require us to submit an annual pooling return each year. All the pools are expected to do that. And certainly over the last 1 to 2 years ago, all the pools had a number of meetings and clarified how we should go about calculating that. So the return that goes to the government is, as far as possible, consistent across each of the pools. The way the savings number is calculated is it's sort of split into 3 parts. The first part is we attempt to compare the fees that you are paying for your assets being managed with ourselves compared to what you were paying before you pooled. So we've gathered historical data to know, so for the assets you've transitioned across, it's a simple comparison of what you were paying with what you are paying now. We also look at so we have running costs to border to coast that you didn't incur before pooling existed. So these are, like our offices, our staff, etc. And then the third part, which won't apply to Lincolnshire at the moment, is around the private markets, the savings that we believe we make on the private markets. We go right back to 2015, and the £65 million is the accumulated calculated savings from up to 2023. Now, it's not an audited account, it's not an audited number, and there are a number of assumptions in there. So, for example, I don't think anybody could say with any certainty that if border to coast hadn't existed, you would have stayed invested in the funds you would have been in, paying the same fees you would have been. So there's a bit of estimation. But there's the work that we do with all our partner funds, we ensure that we share our results, and we have quite a lot of dialogue to fine tune the answers.
Okay, thank you for that. Any other questions?
Not for me, no.
I think the various questions that I sent to you, Joe, I think have all been answered. Well, you answered one in your report actually earlier. Didn't you? About moving to a more commercial basis.
Yeah, I've been cross-checking as Neil and Milo were presenting, and I think they have picked up all of the questions that were sent to them. And yes, I had answered about moving to that fee basis in the from 1st of April 2024, hopefully.
Yeah, I would just say it's not commercial, so the fee basis will still just be cost recovery. It's not. We're not seeking to make a profit. We always will only recover our costs. It's commercial in the sense that it's traditional asset management style of charging, but it's not commercial in the sense of we are seeking to make, dare I say, excessive profits that commercial asset managers sometimes make.
No, I understand that.
Okay.
That's fine. Yeah. No, it was. Well, you know what I was after. Oh, Joe know what I was after. Nothing else? No, that's very good. So thanks very much for your time and the presentation. Really grateful for that. Thanks very much.
Brilliant. Great to see you all, and enjoy the rest of your afternoon.
Yeah, thank you.
All right. Thank you.
Thanks. Bye.
Bye. So in terms of the recommendation, consider and discuss the presentation from Borders to Coast on their annual report and accounts. Ask various questions. We've done that. Thank you. Which takes us on to the training needs. Item 9. Claire?
Thank you. This is just the board's normal opportunity to discuss training. Before I hand over to you, I'll just highlight the changes to the LOLA training that were reported in the last monthly letter. So I think we've been saying with the move to the new version of LOLA that we were asking everybody to redo the training. We've had an update from Hyman's, which means that any training that was undertaken in the old version of LOLA does not need to be redone in the new version. So if you've completed all of that training, then the only thing that you will need to look at is the current issues module, as that's added to with various new parts and things. And I think most recently there's been something around McLeod put into there. That was all I wanted to say, so I'll let you talk.
I think Dave's got a question on that.
All I was going to ask, Roger, thank you, Claire, is on the LOLA system, I've got, like, you get a certificate of progress, don't you? So I think I got up to 4, was it? Whatever, the section 4, whatever it was called. Will the systems know that then? When I go back in, it will be automatic. I don't need to evidence where I got to.
We get a monthly report from the system which shows what modules were completed both in the old system and the new system. When you actually log in, it doesn't mark those modules as complete. They all look as if they're incomplete. But if you've done them, then we will have a record of that. And if you want to know which ones you'd completed, then please come back to me and we can feed that information back to you. And I know I have to Kim already, so that you can see that. We are planning a session in the new year, which was what came out of the committee, for any members of either the committee and the board are very welcome to attend, where some of that LOLA training will be done in here as a group, and then officers can answer any questions that you may have as we go through.
Don't actually think I've done any of the LOLA training in either the old module or the new module, so would you mind sending me the link or how I get started on it, please, if possible?
Yeah, that's no problem. Hymans can send you out a refresher on that, and we'll get them to do that in the next couple of days.
A smile, Mark, because I thought you said at the July meeting that because you've got no council meetings in August.
Council meetings just, you know.
Right, you need feedback from all of us, don't you? Who wants to start?
I went on a Unison 24-hour pension event, and I didn't really learn an awful lot, but other than the other people's pension pools aren't very transparent, whereas they did praise Borders to Coast for the publish of meeting minutes, and there's representatives on there. Some pools don't have any representations from employee side, and also that the pension statements that some people get are terrible. They just get a statement to say how much they've paid in for that year. So I did show them the West Yorkshire one, and they gave quite a lot of praise to that. So
It's very good. Well done.
I don't think I've not done any actual training since the last meeting, but I am booked on to go to the York conference in January. The governors. I was debating going to one in Bournemouth, but fortunately one of my roles at the moment is Mayor of Grantham. So I've got so unfortunately I've got a mayoral event on the day of the conference. But don't worry, Roger, I'm only the mayor until next May, so I'll have a little bit more time then. But obviously I'll attend the training you're arranging in January for the. But I do always go to the 3-day conference in Gloucestershire every year.
Dave, you attended the SITFA conference?
I did yesterday, just by coincidence it was yesterday. It was webinar based this time. They are suggesting come the next one in May we will be back as a face-to-face, which I'd prefer, if I may suggest. But no, it was a 3-hour webinar, and it was quite condensed. There was a lot of information. And we had quite a variety of speakers there. I mean, it was interesting. These head of pensions at the Scheme Advisory Board, Joe Donnelly, was on the call. And I mean, from my own perspective, I learnt more, if I may say, from her session than I did from some of the others. But that's just me personally, isn't it? There were 50, I think. They said there were 50 of us on the webinar event, so it was quite well attended in that respect. And I was quite taken. I mean, although I should have known this, shouldn't I? But it was talking about funding levels. They were saying that out of the 80, is it 87 funds, 88, 86, whichever, the lowest funded was 68%. Didn't tell us who, but the highest, and I didn't realise that, was 155% funded. With the average being, which I think, if I may say where we are, Lincolnshire, about 107%. So when we talk about us being, average, I thought that was quite, but they didn't tell me who. I was quite interested to know who was at 155%. The next question was what they're going to do with the surplus. If you're at 155% funded, what do you do? And we were asked that, what's the likely, well, I don't think anybody at the moment quite understands what they are going to do with but how do you, so that was quite interesting, you know, just something sort of odd like that. And we also had, I mean, I didn't realise, Matt, when I say this, that McLeod is got to be completed by, and I think you've got to include the outcome, even though there might not be many, but you've got to go through the work. It's got to be included in the 31st of March 2025 annual benefit statements. So I'm aware there's a lot of work, but I didn't realise that in some respect there's a deadline of when that needs to be completed. And one, just the last one, what I found quite interesting was that we were asked the question, why does the, if I may say, why is the minister who oversees the local government pension scheme based in the Office of Levelling Up and Housing and Communities? Why, where it's saying that they didn't seem to think that the expertise was in there. Why isn't it in the Treasury or some, well,
is that Lee Rowan?
Well, I don't, well, I said it's the minister is forever changing.
It's because that's where local government sits under DLUC. So that's why the minister there. And to be fair, if it was with Treasury, they would be very quick to try and be taking our money away from us. So perhaps we'd best not hope for that.
We had it's one of those moments where there was questions from within, and as one of the questions, well, why is it with that department? Well, it has as long as I can remember. It was always with the DL, whatever it was back in the. It was always communities, wasn't it? So historically, but why does it sit there? But I suppose you might say that if you were part of the NHS, is it within the health? I don't know where theirs are. Where would the health service team be? Is it?
I think it sits in the DHS.
Is it the DH? But we had a bit of a debate, so it was quite wide-ranging and interesting in some ways where we went to with the debate. I'm not saying there's any criticism. It was just some asking the question. Someone was one of the 50, had not heard at all about McLeod. So we had a poll, do you know what McLeod is? And we had then, well, one of the 50 didn't, he said, I've never heard of it. What is McLeod? He said, it's a television detective, isn't it? Yeah. So we had that. So that's what it was. It was good. I must say, it was one of the more informative of training. And if I may say, the other things I've done is, I haven't been, but I read a lot of what comes my way and your updates. I mean, that I'm doing that obviously, but that was quite an interesting morning and part of the afternoon. So yeah, well worth it. Enjoyed it. Genuinely, it was a good meeting.
Well, thanks very much for that, Dave. God, I can't believe that anyone's not McLeod. Oh dear. Anyway, I guess my stuff has been very much kind of private sector, really. So Pension Trustees Circle, legal updates, LDI. Fortunately, you've not got any LDI, so Lincolnshire didn't suffer or gain. Moving to a master trust and takeover code because I'm involved in a company that could face a takeover. And then again, LDI, new liquidity requirements. Legal update from Mayor Brown, that covered a whole range of issues. You know, all the consultation documents that have been out for the last few months. Hyman's private markets, that was quite interesting. And then this last week I did Aberdeen one about the credit market outlook, which again was quite interesting. I've spent quite a bit of time on the closure of local authority accounts actually for my sins. So, you know, I've had audiences with Tony Crawley at the public, what's it called, public, PSAA, Public Sector Accounts. Audience with the President of SIPFA actually. to discuss the same issues. And I mean, it's fortunate. I mean, I think Lincolnshire, assuming that everything gets signed off in the next couple of months, say by December, I think they will be in a very, very fortunate position compared with most. I mean, it is, and there was a report yesterday by some independent guy from a university that is saying that it will take 5 years to clear all the backlog, which is alarming, to say that this is public money and not accounted for. I have to admit, Claire, I've not done any more Lola until you've answered the question about, you know, do the ones that I've done stand? So that's good to know. And December over Christmas looks a good time to do that when I'm bored. So that's my lot. Anything else on that one? I've not signed up for anything at the moment.
No.
So in terms of the recommendation, board shares the information, done that. Note any conference and training feedback. Sounds like that's it for one, very good. And consider if there's any further training required in future months. I think there's a lot going off, and you'll be bringing stuff to us, and we've got Lola, so I think we've got loads to be going on with.
Can I just come back then on Lola 2, or whatever it's going to be called? Will that training you'll just contact us all, if I may say, Claire? Is that the plan of future? And because the talk in the committee was to bring the training here, wasn't it? And take us through each of the modules if we wanted to take advantage. Is that still on the sort of the agenda?
Yes, so we haven't arranged that training yet, but it will be in the new year, and any board members will be very welcome to attend that. I would suggest that we maybe won't cover everything that's in Lola in the one day, but maybe pick some highlights out of it so that we have covered with the committee those most important areas, and then the board will be very welcome to sit in on that training as well if you want to.
Just on that, Claire, would it be possible, even if you haven't got the timetable, the schedule, to at least get the date sent out so we can get it in, to save it into our diaries, if the agenda subsequently follows?
Yeah, that's absolutely no problem. I'll look at my colleague from Democratic Services who will be asking to help plan that date in, so that they can work around appropriate commitments for members on other committees and things.
Right, well, I think we've dealt with all the recommendations, so I think we can move on to item 10, which is the work programme.
Thank you very much. So the work programme for the upcoming meetings is attached at Appendix A to the report. If we look just at January, the agenda currently includes the normal fund update, admin update, and the 6 monthly data scores. We will also have at that meeting the external auditor's findings on the annual report and accounts. In addition to that, we will bring the annual analytics review. I think if you remember last March, Matt brought some interesting information about use of the website and My Pensions, and the board had asked if that could become an annual item. So that will be on in January. And then we've got the annual employer monitoring report as well. So where we used to bring contributions monitoring to the board on a quarterly basis, we're rolling that into an annual item, plus some other information around employer compliance and employer matters. And then the Pensions Regulator Combined Code will be on the agenda, subject to its publication and availability. Otherwise, that will roll forward to the next agenda. Is there anything else that the board would like to consider for that, or any future meetings?
I thought that one looked pretty comprehensive, actually.
If I could just add something, just for your information really, before the agendas and papers go out, the committee meeting in the morning of that January date, just for your information, we're having Barnet Waddingham come to do some talk about climate change training. But it will cover assets, liabilities, covenants, etc. Just a kind of an hour session, up to an hour session, just to start that initial discussion with the committee for us to start our net zero journey planning. I cannot speak, I do apologise. But just to make you aware, as always, the board are welcome to come along and attend that if they so wish, but I thought I would just mention it now in case that was something you wanted to get into your diaries. That will be the last session on the pensions committee, so if people just wanted to come a bit earlier if they were interested in that. Thank you.
Yeah, thanks for that.
Sorry, Roger, may I just... Is there a pension committee also on the 14th of December? Is that another one of their... When I say there, you know what I mean, one of the new schedule.
Yes, that's the investment and responsible investment or stewardship part of the pensions committee meetings. Generally, the pattern is that the pension board is on the afternoon of the pensions committee administration and governance meeting, because then we only need Matt to make the journey once, and then in between that we will have the investment and stewardship, which of course doesn't sit within the remit as such of the board, but you're more than welcome to attend if you would like to.
I'll give my apologies now, Joe, because originally it was going to be the 7th of December and 14th. When it was changed, I'm committed.
What you're saying though, Joe, I mean, should I wish to attend, like an observer, like there's no barrier for me just being in the room.
Absolutely, it's a public meeting, and as a board member you're entitled to stay for the exempt papers, so yeah, not a problem at all.
I'll be delighted if you could, because I just can't make it.
Yeah, I intend to.
Okay, that's great, thank you. Right, anything else? So, what's the recommendation there? Review the board's future work programme, highlight any activity for inclusion in the work programme. Done that. Right, any other business? Silence. Oh, I thought it was just lifting your hand.
I've had some queries about the pensions inquiry email box and who monitors that, because people are emailing it and they're not getting a response or any estimate of time.
Yeah, this is an LCC/Serco payroll issue. It's nothing to do with the pension fund. It's LCC as an employer. I get contacted regularly about this with things not being answered. I have asked them if they could at least put a return response on to say, we've received your email, expect a response within X many days. That hasn't happened. Unfortunately, I think it's something that needs raising with LCC HR. I don't have any input into that. I mean, whenever I get complaints come to me on that, which is quite regularly, I do then contact the HR representative that is responsible for that pensions element, and include them in the response to the individual and ask them to chase it for them. So, but it's a regular occurrence that I have that. But say, I'm afraid, unfortunately, I don't have any involvement in that email address. So I think the best thing is to raise it with LCC HR. I can mention it again, but it's an ongoing problem with lack of response to that email address.
Yeah, because I assume they're the ones that are being insourced from Incoms today. But I didn't know if they had KPIs to meet in terms of responding to pension inquiries like West Yorkshire do. Unfortunately, at the moment, my understanding is that when the original Serco contract went out, there weren't any KPIs that related to the pension side. So I have raised it with HR, and we are very much hoping that in bringing them back in-house, that will improve. But I can mention it to the head of service for HR again, but I think
it's equally useful if yourself or the individual can raise it, because, as I say, it's not the pension fund itself. This is LCC as the employer being able to answer the questions and ensure information submitted promptly. But unfortunately, it is an ongoing issue that I have with it as well.
Does that mean, is that payroll that's coming back in-house?
So a decision was made by the executive a while ago about the end of the Serco contract in March, 1st of April 24. And at the time, when the original decision was made, the finance staff, the exchequer, AP functions and whatever were going to be coming back in-house, and the payroll and the pensions element of payroll was going to be transferring to Hoople, which are our Aggresso ERP provider. A decision was recently made by the executive, and I presume the incomes that Kim's talking about is gone to staff today, that decision has been changed, and the Serco payroll and HR admin teams are now going to be insourced back into the council from the 1st of April 24.
So does that mean that HR will be responsible for payroll, or will that be a finance function?
HR have been responsible for payroll functions for quite some time, so it's not coming back to me. It's going to be under Tony Kavanagh, who is the Assistant Director for HR and organisational support. So they're responsible for managing the Serco contract at the moment, and I think Fiona Thompson, who is his head of service, and Vicky that works for her, is the usual point of contact for any issues that Kim's just mentioned, but they will be under the direct responsibility of HR.
So just final question from me. I mean, we got into huge problems back in 2015, 16, 17. Remember when we had you had to report to the pensions regulator? Are we not likely to get into that situation again?
No, because the system change has been done. This is purely the staff that manage that coming back under the employment of LCC as opposed to Serco. But
I think the other risk we had at that time was it was the transfer of the contract from Michelle to Serco, and there was an expectation that a number of the staff would transfer as well, and they didn't. So Serco have got no ambition to retain any of the staff. You know, all of the staff that are currently doing the work are on a TUPE list to transfer back to the council, and Serco are still going to be providing the customer service centre, so those relationships are still there. But we're you know, they're quite happy that group of staff continue to provide our payroll. It's effectively who's employing them. So the system change was enacted from the 1st of April. We updated our ERP, our Business World system, from April just gone. So there's been some teething problems with some of the payroll stuff, but not affecting the pension side. I think there has been some issues around response rates to Serco from inquiries around pensions. That's been raised with the AD and the head of service for HR. But as we've said, hopefully as that comes back in house, we can get better management and all of that.
Sorry, if I may ask, but maybe you, Joe, does that mean then that there are admission agreements that will see Serco admitted to the Lincolnshire Fund?
Yeah, they're in a kind of a pooled rate with LCC, so there won't be any cessation of that. There will just be any assets and liabilities of those staff that come back will just come back and will remain within the LCC pool under LCC. So there is an admission agreement with Serco, but as I say, it's a different type to a complete standalone admission agreement where they are required to pay any debts at the end of that contract period. It's passed through basically.
For Matt and the team back at, it's not going to impact massively on. I mean, I remember there was 1,000 went out, wasn't there, back in the day, and that was a big TUPE transfer and bulk transfers and all of what that's not really going to, I know there is probably not as many staff now, is there?
There will be some work because they will be changing employer, but it's probably up to a couple of hundred. It's not the numbers that were when Michelle went across to Serco.
Any other business? No? Right. I'll declare the meeting closed then at about 4:04. Thank you very much for your attendance. Thank you.